Recorder. How come you're not working? Oh, there it is. Okay. Hello, everyone. This is Rick with Hit and Run Candlesticks. I want to thank Doug and John for presenting here. It's my turn now. Absolutely appreciate everybody here. Thank you so very much. Today's topic is repeatable patterns. I could probably do this webinar in about 10 minutes, just so you know. There's only really, 1-2 patterns that I use. Pretty simple. We'll go over those for sure. Let's just get started, I guess. I'm gonna use start with a ticker symbol here that one of our members posted in our room that he bought. I want to reach out to all the Hit and Run Candlestick folks here and say thank you. There's a number of traders there that post their buys and sells, and I just want to say a great big thank you to you all for doing that. I think it's a great help, not only for yourself, it really is, but to everybody else in the room. So, but anyway, this is one that one of our members just bought. A little bit ago, I was out and I came back, and it was there. He posted it, and I think it's a pretty nice looking chart. And the thing I like about it is, and I happen to know that this person trades pretty much same chart pattern as I do. They may have another one, but this is one of them. Let me make this bigger. There we go. So it's just really simple. It's a stock that rallies and it rests and it rallies again. Now, this can be on any time frame, and it doesn't have to be from here to here. It could be something littler. It could be this. It doesn't have to be this large. And it can be larger. I mean, literally the whole chart. Maybe somebody looking for longer term trades, that might be something to look at. And that, I mean, over the years, I've gone through Jiminy Christmas, every chart pattern that I've ran across, every indicator that I've ran across and thought that I could improve. I've tried that, and it just doesn't work out that way. And it doesn't work out that you can improve too much, really. You take what's out there and you make it yours. You make it good. But anyway, this is probably my number one chart pattern trade. The second would be, looking at a breakout here, something like that. But right there, that's it. Here's another chart. Now, this may not look like it, but it is, and I put this up for that reason. Here is, we're up, and we're going sideways. Sideways is the exact same thing as moving back. All that move back is a rest. That's all it is. Sideways is just a rest. Now, here's a case where a stock, for whatever reason, got jammed up on this day. Well, the bulls came back in and bought it, right? So to me, nothing has changed about this chart other than I might like it just a little bit better than I did, because it got jammed up here and the bulls brought it all the way back up. So that tells me there's a pretty strong following on this chart, and it might be very interested in buying it. I have it on my watch list. So let's see, another one I have written down here, ZM. So it's that simple little move like that. What's the pattern called? It's a flag. Everybody and their brother probably has a name for it. This is just a bull flag, is all it is. And it's just it's called, a J hook. It's been called J hooks, because this is what you want it to do. A true J hook actually is when it breaks out, then it becomes your J hook. But that's the beginning part of a J hook. But a flag, a 1, 2, 3 pattern, You know, 1, 2, 3 pattern, an ABC pattern, a thunderbolt. You know, all it is power and rest, power and rest. And then what I'm looking for are the buyers to step in. Now that's one reason why I love the scanner. Okay, and I have to show this because this is so integrated in my trading. So this right here is just a generic overall scan, you know, looking for these type of things, looking here, looking for the UALs, and here we are, up, back, up, right? This right here is a very limited specific list that either I own it or I'm looking to buy it, and I'm waiting for something to happen, and this just alerts me. So, but anyway, yeah. So I hope I answered your question, Imelda. It's just simply something where buyers were interested, and it could be one candle, it could be 10 candles, okay, and then a rest. I haven't looked at these. Let me take a look here. Take a look at this one here. Okay, look at that. See, up and rest. That's what I'm looking for. And here's the chart actually doing it a couple times. Up and rest. And this would be the money right there. Okay? All right, let's remove that. So up and rest. Now we want the money. And really, let's do this. In this case, I know we've come down here, but I'm going to bring it, you know, right here. Now we're going to look at the money, because this is where we might be looking at buying it. I mean, I'm just trying to, you know, show that thunderbolt a little bit better there. Let's see. I thought I saw somebody else say something in there. Let's see. Rally base rally is common term. I've never heard that. Okay, rally base rally. Perfect. I've never heard it called that. Thank you very much. Yeah, very nice. So, I mean, you know, so say you find a chart like this, what do you do? Here's a couple of things that I think needs to be considered. You know, what is the market condition? And I think that's very, very important. So, you know, what is the market condition? And you know, I'm going to look right now and say the market is bullish. Now, we can, and I'm just looking at that little stretch right there. Now, you can come in here and you can say, okay, I love that chart pattern, and we are certainly bullish, but are we, you know, a high, a lower high, a lower high, or a high and a failed high and a lower high? Could we be at a little rough topping area? We could be. So maybe right now is not the best time to buy roll. Maybe not. And this is where a trader's just got to make some decisions, you know. I can't particularly answer those kind of questions for you. Nobody can. You're going to have to say, look, I'm going to be a little patient. All right. You can kind of take your cues from other people. For instance, I look at the SPY here, and I think I'm going to be a tiny bit patient. I don't think I'm going to run out and buy a ton of stuff today. And there definitely are charts I'm looking at buying, even a couple of shorts I'm looking at buying, which that tells you then I am being a little cautious here for me to be buying shorts, because everybody knows I'm a bull. I mean, I can trade shorts. I don't have a problem with it, but I would rather the market be bullish. Okay. So I look at roll here and I think, well, I love that chart, but maybe I ought to pump the brakes a little bit. Another thing that I think is important is have all your tools that you use, okay? For instance, one tool that I use is this T2123. I'm going to put it up here so it's bigger. Whoop, 2123. There you go. It's right here, the 60 minute. Let me change that to 60 minute. There we go. This is the same chart as this one. You can just see it better. This is a 15 minute. And here I'm going to drop the scanner just for a second. There we go. And you can see the 15 minute is rolling over. Okay. Now, we're still good on the 60 minute, but all reversals start with a faster time frame, every single one of them. And 15 is about as fast as I go here. And it's starting to crack a little bit. It doesn't mean it's going to fail because we haven't failed the bigger area. And I'm not here doing I don't want to spend a lot of time on this indicator. If you have TC2000, you have it. If you don't have TC2000, well, honestly, I think you should get it. Okay, I'm not going to lie to you there. I think you should get it. I think this is probably the coolest indicator I've ever run across. And if you follow it, you'll be a better trader. You really will. And so we're getting a little weak right now. So I want to be a little careful. And it doesn't matter, the charts I'm looking at. Let's see, I've got a couple written down here. Look at XP. And these all, I was sitting here listening to John the last, 30, maybe 40 minutes. And I was just watching the scanner click off a few, and I just wrote them down here. But here we are. I mean, look at this. Look how we even started here. Low. Let me make that a little smaller. There we go. Low to a high to a higher low, right? So if that's what you're trading, there's your money shot right there. All right. So you missed that one. Nothing you can do about it. But low to higher low. Are we setting up a money shot right here? We could be. So take this first move. I never worry about grabbing it unless it's that move right there. Okay? So let the bulls step in. If you have a chart that's in a big downturn like here, like this, let them roll. Roll, bulls, roll, man. Get it on. One thing I've learned over the years, and it took a lot. I'm not the brightest apple that ever fell from the tree. And sometimes it takes me a long time to learn something because I'm so stubborn and pig-headed. My wife will attest to that for you, if you need to ask her. But I did finally learn that every time the stock moves up, I guarantee you it will move down. And when it does, then you can take advantage of that rest, that minor pullback. This is what we call a PBO, pullback opportunity. And then there's your money shot. It's real simple. I mean, you put your trade on, and honestly, I don't mean to oversimplify it, but you really can't help it sometimes. You buy your trade, you put your trade on, and then you put your rule in there, or if it goes below X, I'm out. How tough is that? It's not that tough. It really isn't. What happens is we get into all the micromanaging and things like that. I do it too. Everybody does it. You get into that micromanaging. Maybe you get into, you're worried about the market. What are you worried about? You worried that it might not go through? I've seen it go through 1,000 times. I've seen it go through, in my career, maybe 10,000, 100,000, well, maybe not that many. A lot, okay? Just because we have this top here, does that mean we're going to fail? Doesn't mean that, no. So if we just, I forgot what chart we were looking at. XP maybe? Yeah. So, the thing is to trade the chart. We had a conversation in the trading room yesterday, just kind of a short one. Let me pick it up just a little bit here. You know, one thing is sometimes we get too busy drawing lines, like I would draw a target right here. I would draw another target here, that direction. I would put a target right in here, fill that gap. And why do we do that? We draw too many lines. What if we did this? What if we did this? Don't worry about what's on the left. Just trade that chart right there. Don't look at what's on the left. Just trade the chart. It's really simple. Your chart is either working or it's not. Let's see, ZM came up. Look at ZM now. So here's ZM coming up on the scanner. So if you like that, who cares what's on the left? Who cares what's resistance is over there? Now, don't get me wrong. This is not the way I look at a chart, okay? So I'm going to see that. But I just want everyone to think about this just a little bit. You can see where the power came in. So let's put some power in here. Power, right? And now we're seeing a pullback. We're going to draw a line like this just on those highs. The pullback is below that. So, for the T-line buyers, you're buying this right now. For the folks that want to buy a little low, and maybe you use the red, let's see. Maybe you're going to use the low of this day as a stop. Maybe you're going to use a T-line for a stop. I don't know. Maybe you're going to use this wherever your stop is. Your stop is not going to be my stop. My stop's not going to be your stop. Wherever your stop is. Other people are going to wait for this thing to break out. Whoops, that's not a breakout color. Other folks are going to wait for this to break out. We're all looking at the same chart. We're all going to look at the same target, or, awfully close. So, see how simple it is? So what are you going to do if, say we move up and, the price action tells a story. Are you going to stay in it with this candle? Well, I would hope the answer is no. So you get out of it. What if you do stay in it? All right, I'm going to stay in it. And then what if it does this? Maybe you stay in, maybe you don't. Maybe that's still your stop down here. It's just making those little decisions right there. And the chart pattern is always going to come up. We can scan for it every which way from Sunday. So it's just a matter of looking for that chart pattern. And you know what's truly amazing is, I don't know. I would love to know how many traders look for this chart pattern. And I'll bet you it will surprise you how many do that. Because it is such a common chart pattern. So one would think if so many traders looked for it and traded it, it would just sort of blend in, it's like the trees, can't see the trees through the forest kind of thing. But that's not the case, because trading is still between your ears. I don't care who you are. I don't care how mechanical you think you are or you're not. Trading is between your ears. The charts are the charts. It's between your ears. If you put a stop on this and you were to buy it and it breaks out and it comes down through your stop, it's not the chart's fault. It's what's between your ears. If this chart was to do this, if you owned it here and it did this tomorrow and you didn't take profits and it came all the way down like that, the problem is not the charts. The problem is not the money makers. The problem is not somebody else that was in it. The problem is not even the resistance you think was up here. The problem is in your head on why you didn't take profits. And we would talk about your head on that one. Okay? So, here's SCHW coming up. There it is, right there. Well, let's draw this because we probably need to talk about that, don't we? Well, we'll kind of right through that area right there, okay? So let's do this. Look at that power. And then we kind of power up a little bit. Well, actually, what do? We pulled back, right? And there we go again, right? And then here we pulled out. 1, 2, 3. 1, 2, 3, right? There it is. There's the chart pattern right there. Just like that. Well, doggone, what are we going to do about that top? Well, easy. Stop looking at it. Just trade that chart. We put this top on here. If you think to yourself, well, I shouldn't trade it. Well, I am. The answer is don't trade it. If you think you shouldn't, don't. Don't talk yourself into it. I'll bet you'll trade that trade all day long. Well, we're worried about it coming through there. Well, let's take a look at that. Let's eliminate everything here. Let's take a look at what's going on here. All right? See that chart pattern right there? We broke through it, didn't it? Were we worried about that top? Of course we were, because we kept staring at it. All right? Are we worried about that? Whoa, I'm worried about that. There we go. Are we worried about those tops right there? Of course we were. Did that keep you out of the trade? Could be. Too bad for you. And too bad for me too, okay? I do the same thing. You guys, I stay up late night and look at charts and I think of things like this. Why did I not buy that? And I got to tell you, that would have scared the heebie-jeebies out of me. I would have had to wait for a breakout. But yet, there was the buy. There was the buy. This could have been bought, I could have made an argument, well, it's a little early, and you still need to, sit on that gap a little bit. All right? Does that make sense? Now let's look at another one. TGTX. There we go. Here's a double. So low to high. Oh my God, the 50 period moving average, right? Hey, I do that. I'm a fanatic about the 50. Here we go down. Bango. Power, rest, money. Okay? Money. So now we're going to do power, rest, money. Oh, but wait. We've got to go over here and worry about all this. Right? Look, there it is right there. Look, I know you guys can't hardly see that chart. Did we break out of there? We sure did, didn't we? Did we break out of this high? We sure did, didn't we? There's breakouts all the time. I guess that's one thing I want to say here too. So, hey, while we're here, I want to take an advantage or take this time and use it as an advantage, maybe to point out we're crashing here on T2123. We're crashing a little bit, okay? So be a little careful. I just want to point that out. Yeah, I just want to point that out just a little bit, okay? So let's see. Can we find any more of these? Let's look at TWO. Look at TWO here. So here's your power, right? And here's your rest. Where are you going to buy it? And everyone's different. Some people maybe here, some here. Some people bought that on that candle. Remember, that would have been a red candle. Or, I'm sorry, a very green candle. Some people buy it there. Bottom pickers are going to buy it here. Some people are going to buy this candle here. So now, this would have been money for anybody that bought it in here. That is now the power. There's the pullback. And there's the power, or money. There's your money shot right there. Make sense? Any questions? Anything at all? I mean, otherwise, I'm just going to keep repeating all this. Because it's that simple. I mean, there's just not a lot to talk about here on this. I mean, you can overthink it. You can overcomplicate it, I suppose. But we don't want to do that. Okay. So I'm not getting any questions or comments. We can roll this up. All right. Let's roll it up then. I want to thank everybody for being here. I absolutely appreciate it. Please remember, be very careful on this market. I'm not ready to be a full-fledged bear yet. However, there's some charts that I think we ought to look at while we're here. XLE is one I'm looking at shorting, and IBIT I'm looking at shorting, okay? So there's a couple right there. All right, thank you, everybody. You guys have a wonderful, wonderful day. Hit and run candlestick, folks. I'll see you in the room in just a couple minutes. I need to take a potty break. We'll see everybody in a little bit.